Okay, today we're talking about why I hold NVDY, MSTY, the dividend powerhouses with tech exposure. All right, do you want to know how I'm generating over $8,000 per month in dividends from only 2 stocks? It's definitely too good to be true for sure, for now, but I'm taking advantage of some stocks that have been skyrocketing with growth and using that to pay some of my bills and to invest in more growth stocks in my portfolio. If you're curious on how, stick around while we go over it together and stay to the end to see the strategy I use to continue to balloon my stock portfolio. Hey everyone, it's Rico, and today I want to dive into 2 unique ETFs by YieldMax, NVDY and MSTY. We'll look at what these funds are, how they operate, their year-to-date performance, and whether they've kept pace with their underlying assets, NVIDIA and MicroStrategy. I'll also share a bit of my personal portfolio strategy as I hold a significant amount of NVDY and MSTY. Let's explore how these ETFs have fared this year, their tax implications, and how I'm using the dividends to further diversify into high growth stocks like VGT, VOO, NVDA, and MSTR. First, what exactly are NVDY and MSTY? Both are yield-oriented ETFs from YieldMax. YieldMax has a ton of these ETFs based on the most of the best performing stocks in the last 3 to 4 years. The main goal for YieldMax and these ETFs is to offer high dividend payouts to investors, an attractive option for income seekers who want exposure to companies like NVIDIA and MicroStrategy. They achieve these yields by utilizing a blend of covered call strategies and exposure to the underlying stock. Covered calls allow the ETFs to generate income by writing options on the stocks, which can be highly effective, especially during periods of volatility. They also have holdings across US Treasuries to offset the price fluctuations across the index stock. So, examples of these YieldMax ETFs: NVIDIA, MicroStrategy, Tesla, Apple, Netflix, they have a ton. Comment down below if you own any of these ETFs and what your strategy is. These are definitely not long-term buy and hold, but they can help you generate huge dividends pretty quickly. So, what are the pros, what are the cons of these yield-oriented ETFs? So first we'll go into the pros. First pro, high dividend yields, especially appealing if you're looking for income. Some of these ETFs, at the time of this recording, pay out a dividend yield of 50 to 154%. That is just insane. Most BDCs, REITs, and other covered call ETFs I use, they hover around 6 to 12%. So 50 to 154% is unheard of. Next pro, you get exposure to tech growth without direct, concentrated risk in individual stocks, which means you can be exposed to these high growth stocks without a lot of volatility, but we'll talk about the cons on that later on. And finally, these funds tend to perform well in a sideways market where the stock's price stagnates. Basically, these stocks don't go up too high or come down too low, but you'll see in the cons that this can be very bad as a long-term strategy. Okay, the biggest con. Oh, and by the way, is not an exhaustive list of pros or cons, and I'm gonna repeat this again later. These are just some of the biggest. All right, biggest cons. Limited upside potential. Since that's the nature of covered call strategies. If the stock rallies, its capped gains will underperform. You'll see when we review the numbers, you won't see the same growth in MSTY that you would in MSTR. This is pure income and shouldn't be looked at for long-term growth or as a buy and hold. Next con, they have high expense ratios compared to passive index funds. These ETFs come with a 0.99% expense ratio. For reference, VOO or VGT has a 0.03% expense ratio. It can be negligible for income investors who factor in these high expense ratios, but for those that are long-term buy and hold, these expense ratios are pretty high. All right, finally, you can generate more complex tax implications, especially on the options income. More from your CPA later. This list of pros and cons is by no means exhaustive, but these are the general pros and cons. As with anything, I'm not a financial advisor, just a guy on YouTube. Definitely do your own research and trade at your own risk. My approach may not be the best one for you or anyone else out there for that matter. All right, next, let's talk about year-to-date performance. Because that's a great place to talk. We're gonna talk about that, and we're gonna get into dividend yield. So NVDY has performed in line with NVIDIA's market fluctuations, but It's built to provide stable income. Year to date, we've seen NVIDIA reach impressive highs while NVDY, due to its call strategies, didn't fully capture that upside, but it delivered consistent income. So far, NVDY has managed a year-to-date growth of approximately 12.47% as of the date of this recording, while NVIDIA's growth itself has far outpaced it with a year-to-date increase of 189.54%. And keep in mind, this doesn't count the dividend return, so that might bring them closer. But as you can see, investing directly into NVIDIA would have brought a larger return. I'm glad I did both. All right. Similarly, MSTY, tracking the MicroStrategy stock, delivers dividend returns through a covered call strategy also. With MicroStrategy benefiting from Bitcoin's rally, MSTY has shown respectable returns, but like NVDY, it's missed out on some of MicroStrategy's dramatic stock growth. MSTY's year-to-date performance stands at about 79% as of the latest recording, but MicroStrategy itself has soared by 437%. That was not a typo. 437%. Same story here. If you invested directly in a MicroStrategy, you would have seen monumental returns. But let's look at those dividend yields. Maybe it'll soften the blow a little bit. Or maybe not. Okay, in terms of dividend yields, NVDY currently yields around 57% as of the date of this recording, while MSTY is at a whopping 154%. These returns provide cash flow without having to sell off shares. One reason I hold these funds? These returns provide cash flow without having to sell off the shares. One of the reasons why I actually hold these funds. Can you imagine investing $1,000 and getting $1,542 back? That is the benefit of these ETFs. But remember that these are based on performance of the stock. These yields can and will fluctuate. Okay, let's discuss taxes. I'm not going to go too deep in here because I'm not a CPA, but because NVDY and MSTY involve option premiums and dividends, there are some unique tax aspects. For one, their options income. So in these ETFs, it is taxed as ordinary income. And some parts are qualified dividends. These could be taxed at a lower rate, but most income from these funds tend to be ordinary due to the covered call strategy. So the bulk of these are likely going to come from ordinary, but check with your CPA. Now, if you're holding NVDY and MSTY in a taxable account, expect a bit of complexity at tax time. A tax advantage account like an IRA can help here, shielding dividends and option income from immediate taxation. Definitely consult your CPA on more specific tax implications. I am not a CPA and will never give tax advice. Now, that said, moving on to my own personal strategy. So, here's how I approach my holdings in NVDY and MSTY. While I do reinvest part of the dividends, I also use them to bolster my growth-focused positions in VGT, VOO, and NVIDIA and MicroStrategy. My goal is balanced income. So I want income from NVDY and MSTY alongside long-term growth from the stocks and funds. By diversifying this way, I'm able to keep some stability in my income while also betting on future growth. I'm also keeping a close eye on these YieldMax ETFs because in 2023, we saw the fall of TSLY and CONY. These two ETFs were soaring in 21 and 22, but have seen massive losses over the last 18 months. Both there have been slight resurges, but both are down double-digit percentages. I don't want to have capital degradation, so I'm going to exit these ETFs as soon as they start to trend down. So keep an eye on your investments and always do your research, always stay on top of things. So I hope this gives you a bit more insight. NVDY and MSTY can be great tools for income investors who want exposure to tech, but with a bit of a twist, more cash flow, less peer growth. However, if you're looking for aggressive growth, direct investment in NVIDIA or MicroStrategy might be more suitable. For my strategy, these ETFs help balance income and growth, allowing me to maintain flexibility and to reinvest into high growth assets. Let me know your thoughts. Are you more of an income or growth focused investor? Drop a comment down below. If you love these ETFs, let me know. If you hate them, also let me know. And as always, if you liked the video, please give it a thumbs up. Subscribe if you haven't already. Thank you all for watching. Take care, and I'll see you next time.